You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is time once again for the one volatility program to rule them all. Yes, it is time once again for Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Pretty much available on just about every platform under the sun. If you like what you hear, if you're listening on demand, we just asked you. Put a review in there, put a rating. It does help. There's so many new people discovering the world of options and indeed volatility these days. They need a nice little guiding hand to find the right content. Help steer them away from the scammers and the hucksters who proliferate out there. Keep sending them our way. We'll treat them well over here. And of course, if they want to upgrade, move on over to the Secret Club. Join us a little bit later today for Options Oddities, the Pro Q&As. We had the Flow Master on earlier this week, a great discussion with him. If you want to check out all that, of course, we gave away another pro trading crate this week. Going to bankrupt myself on shipping, but it's fun. We like doing this kind of stuff. Then head on over to theoptionsinsider.com/secret club. That's the place to go to learn more and join the party. It's happening over there. And of course, however you listen live after the fact, keep sending in those questions, those comments. We do love to hear from all of you guys and gals out there. Let's see who we're hearing from today. We are joined once again by the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of the Southern Volatility Mecca known as Austin. Mr. Meatball, welcome back to Volatility Views, sir.
Good day, Mark. Boy, was I looking brilliant till on my guess until about, I don't know, let's say 11 o'clock yesterday.
Everyone's declaring premature victory. Brian was gloating this morning. He's like, oh, I'm exactly at it. He was at, his guess was 24 something, I think 24-12. And he was at it somewhere close to it this morning. But I had to break it to him too. You know, the game is close of the show. We've all been there. We've all tasted victory and have it ripped from our grasp. Will that happen again today? Will Brian be able to gloat yet again? He thinks this crystal ball game is easy. We shall find out as we keep on rolling first right into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we do just that. We break down the week that was and still is from a vol trading and trending and analysis and unusual activity and all sorts of perspectives. And we started off the day kind of mixed. The Dow was actually up. The rest of the major indices were feeling the red. Then we started to trend lower again, and the sell-off exacerbated. We got off over 1% at one point in the NASDAQ, down about 0.5% in the S&P, and about 0.15 or so percent in the Dow. Now it seems like maybe we're rebounding off that low a little bit again. So most of the major indices still red, even though Dow is flirting with unched again right now. So we shall see. It's one of those markets, listeners. You don't like what you're seeing, just wait 5 minutes, because is the reversal in? Are we going to just sell off more? Who knows what's lurking ahead of us, listeners. So coming into showtime, we saw an interesting vol morning already here, as the Meatball alluded to. We saw kind of vol getting weaker, then maybe a little bit firmer, then weaker again. Coming into the start of the show, we had spikes at about a 25.5. That puts it up actually 1.25 points, so up on the week from this time last week. VIX cash, when we commenced our proceedings here, was at about a 24.5. That puts it up about 0.75 of a point from where we were this time last week. And VVIX, our old friend, the vol of vol, at about a 131.5, so getting frothy again, up about 6.5 points from where we found it this time last week. Getting out there to the Viking, a.k.a. the V-Spikes, another flavor of vol. It's also ticking up. It's up to about a 168.5. That's up 8.5 points from where it was this time last week. Remember, if you can't find that one, listeners, T3index.com is the best place to go. They have a whole spike section there. You click on that, you'll see everything. You'll see BitVol and all the other stuff as well for the crypto stuff. So if you want to do a little bit of a deep dive into Simon's vol indices, they're all there waiting for you. And of course, you can find V-Spikes. If you're looking for it on your platform, try VSPKE. That's the ticker symbol for it. And hopefully your platform should have it. But again, 168.5, up about 8.5 points from last year. That kind of puts it right kind of smack dab in the middle of its range for the year. It hit its high of about 205, almost 206 back on December 3rd, right kind of in the immediate wake of all that Omicron madness popping off on Black Friday. And the low for the year, and I use year in air quotes, listeners, because it hasn't been out for a year yet, but the low so far back on November 4th of about 128. We're at about a 168 right now, so kind of right in the middle of that range. Mr. Meatball, a lot to unpack. Another kind of topsy-turvy, weird week where we're moving in one direction, then we kind of start reversing, then we end up selling off again, or all sorts of vol to discuss this week. What was lighting up your tape, sir?
Yeah, I mean, it's definitely been a pretty topsy-turvy market most of the week. Vol was just getting obliterated. And then, we got the CPI data. We initially really didn't see a big move in vol. It actually took Bullard saying, hey, I want to see rates go up by a full point by July. That really cooked the markets, and that sent us into a bit of a tizzy.
Yeah, what were your thoughts on that kind of weird response to what we saw this week with this whole kind of crazy CPI number, and then the markets were, I think you can call it a little bit wishy-washy at first. You're right. Then all of a sudden we kind of saw that next leg kick in. Were you expecting maybe a little bit more immediate response to these somewhat dire CPI numbers, or were you kind of like me? I was kind of expecting a dire CPI number, so when it came out, I was not that surprised. Which camp did you fall in?
Yeah, I mean, I was fully expecting the CPI number to stink. But so I wasn't totally shocked when we started to turn around. But then things got worse, right? We saw the market really start to take it on the chin, and that was that.
That was that indeed. Let's see what that is from an overall skew perspective. Let's throw out my favorite of all indicators, which is, of course, the skew index, listeners. At about a 128. What does that mean? Not a heck of a lot, but it does mean we're off the highs, though, listeners. We are at about 155. That usually tends to be where skew index tends to top out over there. Usually that shows, or at least it indicates there should be some froth to the puts. You never really know with the skew index at about a 128 right now. So, and as we talked about yesterday on TWTR breaking down some of the skew out there and some of the equity products, we have seen some of that demand for some of those puts somewhat mitigates. Is that your takeaway as well, Mr. Meatball? Right now, we are no longer in the, shall we say, extreme skew environments we were like a month ago.
No, but it's definitely people have been taking advantage of that because we've been seeing a lot of action in the triple Qs where they're buying in some decent size out of the money puts and things like that. So yes, but it's being noticed, and then they as soon as skew gets cheap enough, they jump right back in.
So maybe we'll see back up to 155 for the skew index this time on the show next week, listeners. Moving on out to the land of the futures. The Spikes futures volume continues to grow. I'll let Matt and his ilk discuss that when he's back on the show. He is the major domo for all things futures over there at MyAx. He has the scoop on the latest volume numbers out there. Out there on the VIX futures front, though, a little bit of a different story. Let's get on out to the curve first. We were talking this time last week with all this kind of trepidation baked in the market. We were looking at a little bit of backwardation. These days, not so much. That front portion of that curve has calmed down, as you would expect. Coming into showtime, we are seeing the Feb future. It was down not much, about half a point. It's not a huge change from this time last week. March was down a little bit more, down about 0.75 of a point. Mr. Meatball, what's catching your eye out there in a vol surface that is no longer frothy and backward, sir?
Yeah, I mean, we went from really backward to now to in a pretty nice contango to now back to kind of flattish. We're still in a contango, but it is not nearly as steep as it was Wednesday morning. They really try to take this thing to the woodshed. And then, again, I think we were on our way to an up market and VIX down on the day. And then Bullard opened his mouth, and that was that.
Yes, we love when all this cacophony of voices starts chiming in and around the Fed. That's usually where we see some exciting action. Usually it's a random Fed governor somewhere decides to chime in. There are no shortage of voices opining on the Fed. I'm curious for you, Mr. Meatball. We were just talking about this yesterday on our TWIFO program, which got me thinking about it again. Over the last year, as the Fed has been out there kind of maintaining this line that inflation is transitory and, the whole pay no attention to the man behind the curtain kind of thing. I've never heard more people on the network. First off, more people chiming in on the Fed. We don't really talk about the Fed that much because it's not really the most scintillating of topics usually. But over the past year, I can't recall any other time since we've been doing this, which is now 15 years, that I've heard so many people of all different stripes and shapes and sizes chiming in just completely at odds with the Fed and this notion that this inflation is transitory. Do you find yourself falling into that camp these days as well, sir?
Well, it certainly doesn't feel like it's transitory anymore now that they want to raise rates so fast. It took them about, 3 months to go from transitory to this is a serious problem, which you got to say is pretty impressive.
Yes, they caught up to where the rest of the world was. A year ago. Finally. I mean, the Fed not known to be fast acting, but yeah, that is interesting stuff out there. I think our guest yesterday on TWIFO said the Fed has never been more wrong than it is right now. It's kind of hard to argue with that sentence. I know bashing the Fed is easy. That's why we don't do it here on the show. And it's not an easy job at the end of the day. Let's see what's going on out there in the land of vol options, listeners. And actually, the answer to that, at least for today, is not a heck of a lot. Spikes options, we're still seeing it dominated the OI by that four-way that went up a couple of weeks ago. We have the Feb 22-26 put spread going up against the 30-40 vertical. They did have it on, I do believe, for the upside. They may be regretting that now, maybe wishing they had it the other way, selling the call spread against the put spread, given what we've seen out there of late. But they haven't taken it off either way. So intriguing stuff. We shall see if more four ways and multi-legs spreads. I know a lot of you have been asking and talking about spikes, in our chat and in your emails to us. Have you guys been diving into any spikes options? We have seen the markets getting tighter out there. Has that maybe give you the inclination to fire off a 10 lot here or there? Hit us up. Let us know what you're thinking out there. Moving on to the land of VIX options. Listeners, usually a day where we got a little bit of red on the screen and we got a little bit of whipsaw action usually can translate into a little bit of action out there in VIX land. And the answer today is really not a lot. Even though the ADV continues to climb, listeners, coming into today's show, we are just a hair's breadth below the 700K level. Remember, we broke through that a month and change ago, got up to about, I think it was around 730. And then the bottom fell out from it. We fell all the way back down to almost into the 300K range again. And this last couple of weeks, of course, we've seen vol ticking up out there. We've seen volume ticking up out there. And so the ADV and VIX moves up commensurately, threatening the 700K level again, up another 53,000. It was up 54,000 last week, up another 53,000. So up over 100K just in the past couple of weeks. So a lot of paper going up out there in VIX land, which makes today's action all that more stark in contrast because there isn't a heck of a lot of it. Only 141,000 contracts on the tape right now. We'll get into today's action in a second. First, let's break down the top positions. What is dominating the tape out there in VIX land right now, listeners? Let's see. And it is, if you're wondering, it is 80-20 puts over calls out there in the top 10. So once again, a product that is traditionally call dominated. Once again, pretty much all puts all the time, except for the number 10 spot. The bottom of the top 10 cost you 132,000. Cost you 132,000 contracts to break into the top 10 today. It gets you to the Feb 70s. One of my favorite open strikes, except perhaps for the other open call, which we'll get to in a minute. Number 9, also 132,000 of the June 19s, a fair smattering of June here in our top 10. Number 8, also June, 134,000 of the June 16 puts. Number 7, our second and final call in the top 10. If you're thinking, I don't know, Feb 25s maybe, Feb 20s, the answer is no. It's the Feb 50s, the Feb 50s and the 70s. The only 2 calls to be found in the top 10, listeners. 135,000 of those bad boys open there as well. You out there putting on a Feb 50, 70 vertical? Hit us up. Let us know if that is indeed you. Number 6, 149,000. Back to June, the June 18 puts. Somebody got all puts all the time, the rest of the time here, listeners. The whole top 5, all puts. 150,000 of the Feb 17 puts. Number 4, 169,000 of the Feb 21 puts. Number 3, $171 of the Feb 20 puts. Number 2, $173 of the Feb 19 puts. And number 1 with a pretty meager bullet, especially for VIX, only 184,000 of the Feb 18 puts. We have seen the volume, like we said, continue to tick up, yet the OI, at least in the top positions here, not reflecting it. Overall, there's about 9 million contracts outstanding. So there's a fair amount of paper open in VIX right now. Just it's spread out all over the place pretty much. Let's see what some of that paper is spread out into. Let's go to today's paper first. Like we said, not a ton of paper on the tape, about 141,000 contracts. The big print when we kicked off the show, the March 18 puts, 14, almost 15,000 of those bad boys going up, followed by the rest of a whole lot of nothing, 5,000 each of the May 17, 20, and 19 puts, and the bottom of the top 5, 4,500 of the Feb 30s. Going out to yesterday, a little bit more paper on the tape yesterday, 784,000 contracts to be precise. The big dog yesterday, the Feb 21 puts, about 65,000 of those, followed by the Feb 20 puts, 62,000 of those. Number 3, the Ox 75s, 50,000, pretty much exactly, of the Ox 75s. Number 4, 32,500 of the Feb 30s, as the Irish like to say. And number 5, 29,000 of the Feb 19 puts. Out to Wednesday, also a pretty active day, 759,000 contracts on the tape. The big dog on Wednesday, 88,500 of the Feb 20 puts. Back to that 20 put strike again, 73,000 for number 2 of the Feb 21 puts. Number 3, 68,000 of the Feb 19 puts. I think you see where I'm going here, but then we break away. We fall off quite a bit. We go down to 27,000 for number 4, but it's actually a call, the Feb 20 calls, and then rounding out the top 5 on Wednesday, about 24,000 of the March 20 puts. Going out to Tuesday, a decent day as well, about 600,000 contracts on the tape. The most active, again, back to those Feb 20 puts. They seem to capture the imagination these days. 44, almost 45,000 of those, followed by 37,500 of the Feb 21 puts. Number 3, 35,000 of the Feb 19 puts. Again, all puts all the time, listeners. Number 4, 29,000 of the March 20 puts. And number 5 on Tuesday was 29,000 of the Feb 22 puts. Monday, also a decently active day, 528,000. All of them seem like they're on pace to beat what we got going on today. 528 on Monday. The big dog on Monday, March 19 puts, followed by number 2, 27,000 of the May 20 puts. Number 3, 20,000 of the April 20 puts. Number 4, it's 20 strike, just capturing everybody's imagination in every month this week. Number 4, 20,000 almost exactly of the April 35 calls, and rounding out the top 5 on Monday, 20,000 exactly as well of the May 35. Mr. Meatball, what's been catching your eye? And I know in particular a bit of a spread has been lighting up your tape this week, sir.
Yeah. Yesterday, a customer sold 10,000 of the October 35 calls and bought 50,000 of the October 75s. Did it for a small debit, 1 by 5. And then today, same customer back, 1 by 5, small debit, sells 10,000 of the 35 calls, buys 50,000 of the 75 calls. Obviously, a ratio hedge, potentially a margin trade, or could be against some sort of structured product or some sort of variance play, but just definitely eyebrow raising that they're now short 20,000 of the 35s against 100,000 of the 75 calls.
Yeah, it's funny you mentioned that because I was looking at that before the show. Maybe they're putting that print up late because I still haven't seen today's print go up. It's not listing up there yet. They are holding on to today's print, sir. Skullduggery afoot in the VIX options land.
No, I see it. That's weird. Yeah. Looks like it went up about 10:56 Central Time, 11:56 Eastern Time, as a part of a spread. So it's really big bulk trade was 48,750 versus 97.50, and then probably some trader did 250 by 12.50. Some other trades that are going up. Kind of a big March strip went up. They did the 20s, 19s, and 17s all went up 5,000 on a print. You got a buyer of the March 18 puts paying 20 cents, about 13,000 times. Even some of the 21 puts are still trading, 12,500 of those being bought for 24. So lots of action, still heavy puts, but we're starting to see the calls break in here.
So what are your thoughts on that 1 by 5? You legging into that at Carmen line? You taking down some pieces of that? You a big fan?
You know what? That is definitely against some sort of structured product. It is not my bag.
Yeah, I don't see you putting on the old 1 by 5 out there. Maybe in the old OEX to SPX days, but not so much in the VIX options days out there today. Let's get on out to the land of the products you folks love to fade all day long. You got a little bit of it on this week, listeners, talking about VXX first. When we kicked off the show, we were at about a 21 even out there in VXX land, puts it down about half a point from last week, and it's still kind of hanging out around that level. There hasn't really moved much. Let's see. So far, actually, there was decent paper going up earlier this morning in VXX because it was already outpacing VIX even then. It was 188,000. And the VIX was a little bit over 100,000. Now VXX up to 232,000. So another one of those tail wagging the dog days where VXX putting up more numbers than VIX options. Even though, in spite of that, the ADV actually ticked down a little bit this week. It ticked down 3,000 contracts to 353,000. So the ADV is still close to half what it is in VIX options. But again, every now and then we do see VXX pick its head up and say, you know what? I'm going to put up a little bit of paper out there today. Let's see what's going on out there from an overall open interest perspective. The top open interest, and again, exact same thing as what we're seeing in VIX in the top 10. We're seeing pretty much 80-20 puts over calls out there. Only 2 calls to be found in the top 10. Cost you about 17,500 contracts to break into the top positions in VXX this week. That gets you to the March 19 puts. Number 9, our first of only 2 calls in the top 10, 18,500 of the March 35s. Number 8, 19,500 of the Feb 18 half puts. Number 7, 20,000 of the Feb 20 puts. Number 6, 21,000 of the March 18 puts. Number 5, 22K of the Feb 16 puts. Number 4, 22, almost 23,000 of our second and final call in the top 10 here, the Feb 60s. Of the March 35s, not optimistic enough for you. Here come the Feb 60s, 23,000 of those. Number 3, 34,000 of the Feb 18 puts. I think you know what the rest of this is going to be, listeners. Number 2, 44,000 of the Feb 19 puts. And number 1 with a bullet out there this week, listeners, 45,300 of the Feb 17 puts. Getting on out there to what was lighting it up out there this morning in the session so far. We've got about 20,000 of the Feb 21 calls. So it's calls leading the dance These are obviously expiring today in the weeklies, followed by 15,000 of the 22s, again, also expiring today. Going out to March now, March 16 puts for number 3, about 13,000 of those. Number 4, back to Feb, going out today. The Feb 20 puts, about 10,000 of those. And rounding out the top 5 today in VXX, 10,000 almost exactly of the March 17 puts. Mr. Meatball, a little bit of a better week for the folks out there who like to play the old downside trade in VXX. What was lighting up your tape and the tape of your crazies this week, sir?
Yeah, we're heading into another expiration. VXX really got a lift on Thursday. Was threatening 18. It's now over 21. Really active on the weekly options. That's what's driving all the volume today. So far, about 20,000 of the 21s have traded, 15,000 of the 22s, and 10,000 of the 20 and 20.5s so far. So a lot of volume today, but it is almost all in options that expire in approximately 2.5 hours.
Good times out there in VXX. You come to expect that. A lot of weekly paper going the way of the dodo today, lighting up the tape out there in VXX. Let's go out to its sister product, UVXY, see if that is the case out there as well. UVXY getting a little bit of the old downside on this week as well, even though not a ton. Got down to about 14.5 when we kicked off the show, down about 0.6 of a point. Actually has ticked up a little bit since we started the show, so down about 0.5 point now from where it was this time last week. Seeing some decent paper out there, even if, like VXX, we actually did see the ADV tick down a little bit on the week, down only about 1,000. It's down to 231,000. That's still a pretty impressive number for UVXY, a product that most people had written off not too long ago, myself included, post the great neutering out there. Didn't seem like a lot of people had a use case for it, but it has found a use case in a universe where there aren't many other products that do what it does. Even if it does what it does pretty crappily, it's still one of the last of the Mohegans out there, as we saw last week with Mr. Famous Dave coming to its defense once again out there. Today, about 152,000 contracts on the tape, so UVXY even hanging in there, outpacing VIX options today. Kind of a weird day on the paper front when all these other products are leading the dog yet again. Let's see. In terms of the top positions out here, cost you about 8,000 contracts to break into the top 10 in UVXY. By the way, it is 70-30 puts over calls. So strangely enough, the product that tends to erode the fastest has the fewest puts in the top 10 of the other two. Of course, we have seen this before. There are some interesting upside overriding positions that tend to pop up in UVXY as well, and that seems to be the case again this week, except for one. You'll see what I'm talking about in a second. Number 10, about 8,000 of the June 10 puts. Number 9, 8,000 as well of the March 12 puts. Number 8, our first of 3 calls, 8,900 of the March 15. So comparatively reasonable call strike. Number 8, about 9,000 of the Jan 2024 1 puts. The 2024 1 puts. Mr. Meatball, how many reverse splits will we have between now and expiration of Jan 2024 in UVXY, sir? They have these 1 puts.
4.
4. I was going to say 2. 4. Wow. Either way, that brings a smile to my face. Someone is loaded up to the tune of 9,000 of the Jan 1 puts expiring in 2024. Hope you like your split adjusted prints, because that's what you're going to have for a while in that one. Back out to, shall we say, maybe somewhat more relevant paper. The Feb 10 puts, about 10,000 of those, number 6. Number 5, our second of 3 calls in the top 10. 10,000 almost exactly of the March 50s, 5-0s. That goes back to kind of some of that upside overriding action we've seen out there. People aren't really buying these, listeners, so don't get too worried. Number 4, 12,000 of the Feb 14 puts. Number 3, 13,000 of the June 20 puts. Number 2, my favorite on this list, 17,000 of the March 70s. Also a fun strike to the upside. And then number 1 with a bullet out there this week, listeners, the Feb 12 puts with about 22,000 contracts. In terms of today's paper, what is lighting it up on a fairly decent day in VXX and UVXY, if not so much in VIX? Almost 15,000 of the March 18 puts dominating the tape out there. Actually, let me fix that up again. That was giving me There we go. It was the Feb 14 puts that are dominating the tape out there today. Again, almost 15,000 of those. Followed by, these are expiring today, by the way, listeners. Number 2, about 14,000 as well of the Feb 15 calls. All this Feb's going out today, unless I tell you otherwise. Number 3, 12,500 of the Feb 14 halves. Number 4, about 11,000 of the Feb 15s, the traditional monthly Febs there. And then rounding out the top 5 in UVXY this week, we got the Feb 13 and a half puts, 8,000 of those bad boys. Mr. Meatball, you got a little bit back to the downside in UVXY. That's what you're coming to the party for. What did you and your crazies, what caught your eye out there in the land of UVXY this week, sir?
Yeah, this is another one. It looked like it was going to be on its way to a new all-time low. And then Thursday happened, and we got a really nice pop, and vol absolutely exploded. The vol of the options actually exploded way more than the movement. And now here we are, and the market's down 40, and vol continues to be pretty frothy.
Frothy indeed. Let's see if the earnings season so far and earnings this week in particular, listeners, have been frothy. We got a lot of numbers for you. You can sink your teeth into them till your heart's content over there, theoptionsinsider.com. Click on the options news and articles tab to begin your journey to the dark side, listeners. While you're there, you can check out earnings move results, earnings season, and the newly minted earnings trades reports. Let's get to some of these. Obviously, a hot week this week. Hasbro going out to the toy vol on Monday, and Chegg. Tuesday, we had Pfizer, BP, Peloton. Wednesday, we had CVS, Diz, Uber, Zynga, and Mattel, the other side of the toy spectrum there. Thursday, Coke and Pepsi. Speaking of spectrums, the beverage spectrum just dominating Thursday, followed by AstraZeneca, Twitter, Expedia, and Duke Energy, a.k.a. the Duck. And then Friday, we've got Under Armour out there. We have updated reports for most of these names out here. Let's go out to really quickly pop off a few of them. Mattel was on the 9th after the bell. They were trading at 22 3/4. They were pricing in 7.2%. You may say that's a lot of juice, a lot of vol for the toy sector. And yet you'd be wrong because it wasn't enough. They delivered 10%, one of our outperformers this cycle. Let's go out to Motorola Solutions. I haven't talked about them in quite some time as well. They're on the 9th after the bell as well. They were pricing in 2.1%. By the way, they were trading at 238.5 going into their announcement. They delivered about 3.5%. So a little bit extra juice out there in the land of Motorola Solutions. Let's keep on going out here. Let's go to the Duck, a.k.a. Duke Energy. They were on the 10th before the bell. 104, almost 105 is where they were trading. They were pricing in 2.1%, and they delivered, get this, listeners, 2.1%. Now, obviously, as I said before, these are taken kind of immediately after the earnings. So if you wait a little bit, it's a little bit of a different story. And if you waited now, we've seen Duke Energy sell off about another 2 points from there. So it has surpassed that straddle in the subsequent sessions. But immediately after the earnings, which is kind of really all you can measure, it was pretty much unched. That's very impressive. Disney, another one kind of interesting out there. They were reported some numbers that surprised some people out there, including decent numbers in the parks. You wouldn't think that would have been the case. And yet the stock was at about 147.25 when they announced they were pricing in 6.5%. They delivered 5.8%. But another one, if you kind of waited a little bit, they got a little bit higher in the after hours, and they had a decent run. In fact, they were rallying again today. They got up to, looks like 154.5 today, just a few hours ago, before taking it on the chin now. Part of this turnaround, it seems like we're seeing out there, because they've sold off, looks like about 4 points from that intraday high. They're at about 150.5 now and trending lower. So the Diz turning it back to the dark side. I know it's a controversial name out there these days, that CEO, not getting a lot of love, even though the street likes him slashing and burning out there. That tends to not exactly win you a lot of points internally. And if you're not making the numbers on the stock side, then the shareholders aren't too happy, and the board's not too happy with you either. So it'll be interesting to see how long this new CEO is around over there at the old Diz. Going out to PepsiCo, they're on the 9th after the bell. 171, almost 172. They were pricing in 2.1%. They delivered a whole heck of a lot of nothing, 1.3%. So I guess not a lot of beverage vol to be found out there. Let's see, they have sold off a little bit since they sold off about another $1. So they have exceeded that straddle again, if you held on to it through the end of the week, which is not something we advocate. We don't advocate anyone diving into all these earnings trades. We just know the analysis, the volatility is informative out there. Let's go out to Coke as well. Let's go to the other side of the beverage spectrum. 61, they were popping off before the bell on the 10th. They were pricing in 3.1%. They delivered a whopping 1.8%. So not a lot of juice out there for Warren Buffett's former favorite beverage, trading about $60 right now. So they have sold off since then as well. So another kind of frame of reference play. Let's go out to Uber as well. They made our top 10 this week for the first time in quite some time. They were making some noise. They were on the 9th after the bell. They were at $40 even when they went into their announcement. They were pricing in 9.6%. Get this, listeners. They delivered whopping 3.9%. Now, of course, they're at about $35 even right now. So they have sold off about another $7 from where they were. They were almost at 42 after the announcement. So they have sold off quite a bit from then. So again, another one of these tales where if you waited a few sessions, you got the move you were hoping for, just not immediately out. Let's see a few more. Twitter, the 10th before the bell, 37.83 is what they were pricing in. They were pricing, that's a 15 vol they were pricing in, listeners, 15.1. And they delivered again in the immediate post-announcement phase, a whopping 1%. So that's kind of what we've come to expect since the pandemic, a whole heck of a lot of nothing. Of course, they have sold off a bit as well, about 2 points from there. So not quite the 15% that they were pricing in, but they are looking a little bit better now. All these names, again, have seen a little bit more movement towards the end of the week. The season, how is the season shaping up? Well, week 1 was at 102%, so a little bit outperformance. Week 2, an apocalyptic 67%. That's kind of the old school season we've come to expect ever since March of 2020. Week 3, back close to green, 97%, so looking pretty good. And week 4 so far, 104%. Obviously, we haven't crunched all the numbers for Friday and everything as well, so we'll do all that next week, and we'll let you know the official number. But so far, going into today, it was at about 104%. That puts the season at an 89%, listeners. So again, that's nothing to sneeze at, given that we were seeing some pretty dire seasons not that long ago. Let's get on out to the earnings trades. And man, there are a ton of them, listeners. If you're not checking out this earnings trades report, you really should. It's completely free trade ideas for you. You don't have to do these. They're just informative on how things perform. You can see how they put them on. They give you the strikes. They give you the vol. They tell you when they close them. And it's really interesting stuff. You got a lot of long straddles this week, straddles in ITT, Cyber, it looks like Lumen. Actually, that was a short straddle in Lumen. So they're selling straddles in Lumen and Sonos, I believe. Then Disney, they bought a calendar in Disney. They bought a calendar in Twitter as well. So they have all the expiration dates on here. They have everything you need to actually look at these trades for yourself. And let's see, looks like they also have some going into trade. They have a whole bunch of segments here. Things that are entering their signals, things that are exiting their signals. No short calendars yet. I'm still waiting for that. We had a few of those last season. It's not a trade a lot of people can immediately grok to. It's kind of a bit of a counterintuitive. Calendars themselves are usually pretty strange. You're buying a longer term contract, selling a narrow term one, but flipping that on his head, you know, buying the narrow term, selling the longer, that tends to blow people's brains sometimes. But we do have a few of those popping up. Looks like none so far this season, but we had a few last season. So we'll see how that's working out here as we keep on rolling. Actually, we do have a few reports really quickly I want to hit on that were coming up. We had Under Armour today before the bell. Let's see, they were at a 17.5 going into the announcement. They were pricing in about $2. In the past, they had moved about $1.50. And let's see, they are off about almost $2 right now. So that's pretty much exactly, a little bit less, actually, about $1.90, which is exactly their straddle, about $1.95. So that's pretty much exactly in line with what we're seeing out there. Going out to next week, we've got some hot vol next week as well. Still have some big names popping off. Marriott on the 15th before the bell, they are at 173.5 as of this report. They're pricing in 777. In the past, they moved 414, so a lot of vol in the hospitality sector. Airbnb, similar sector, if not quite exactly the same. 169.5 on the 15th after the bell. They're pricing in $14.40. In the past, they've moved $13.31. And we got Viacom on the 15th after the bell as well. $39. In the past, they've moved $2.50. And right now, they are pricing in $1.58. So a lot less vol in Viacom. Let's go on a couple of more. Let's go to Palantir really quickly. 17th before the bell. $13.87 is where they were trading. Man, that name has been beaten up of late. $1.58 is what they were pricing in. In the past, they've moved to $1.42. Interesting. And then we've got, we'll wrap it up here with Walmart, 137.69. They're popping off on the 17th before the bell. They're pricing in $5 pretty much. In the past, they've moved a little over $3. So a lot of extra juice out there in Walmart. You know what? Before we roll into your question, let me just pay off. We ran these back in January. We just had such a busy January, listener. We didn't have a chance to get the numbers. We usually like to run our Google Trends data twice a year, at the beginning of the year and like a midpoint kind of checkup throughout the year. So we ran these numbers in January. We just haven't had a chance to get to them now for the vol trends for the year. Well, let's start it off with the product a lot of you know and love and like to trade, which is VIX. At the time we ran it, which was in January, we saw the vol interest was at about a 58. Now, if you know about Google Trends data, they rank it on terms of 100 being the apex, the most Google searches. And then the rest of the numbers are some percentage of that. So you're talking about 58% of the apex interest, which came, interestingly enough, and I guess you might expect this, on November 28th to December 4th. So that period right after the Black Friday Omicron pop. So not in January like you might have expected. January was the high for the year for VIX, but the apex for search interest for VIX was actually later in the year, November 28th to December 4th. And Mr. Meatball, if you had to guess, what would you say are the top 5 search destinations for VIX in the United States, sir? Go ahead. Fire off some names.
New York.
Okay, number 5. Good guess.
Chicago.
No, Illinois, nowhere on there. They go by state, so no Illinois.
Okay. Not Illinois. California.
No. Remember, it's by capita, so that's how things like Maine could pop up in there sometimes.
Oh, by capita. Okay. Connecticut.
Yes, Connecticut number 2. So Thomas and his ilk over there at IB driving a lot of love in Stanford. No Rhode Island, no. So you got the bottom 2 so far. No, you're close. You're in the New England area.
Massachusetts.
Yes, number 3. I'll give you number 2 because you won't get it. The District of Columbia, D.C. itself. Some of our listeners have suggested that maybe that's lawmakers doing research. I think that's kind of optimistic, but I'll take it. I'll accept it. And the number 1, I'll just give you I'll let you guess it because it is still in that New England area. And I'll give you another hint. It is not the Rock Lobster's home state.
New Hampshire.
Close. That'd be Matt. That would make sense, but no.
Vermont.
Yes, the land of maple syrup. And also, according to Google Trends data, the number 1 destination for VIX searching in the U.S. as of the beginning of this year. So, yeah, just process that one. It used to be Maine, now it's Vermont, listeners. I don't know what to tell you about that. Drilling down a little bit really quickly, let's go to volatility itself. We also ran those numbers. And let's see, the peak for... Actually, I'll let you guess, Mr. Meatball. I said I thought the peak for VIX searching would be towards the latter portion of January. That's where it topped out for the year. But it actually was in that Omicron spike in late November, early December. When do you think the peak for Google searches for the term volatility was in 2021, the entire year? What week peaked it?
What week?
Yes. What was the top, the apex of Google searches for volatility in the year, the mad year of 2021?
Let's say all of 2021. Let's go the first week of December.
Interesting. That is pretty much where it was for VIX, but it actually was, my guess was right for this one, not so much for VIX, which was the last week of January of last year, which is when, VIX hit its apex. We were kind of coming off the insurrection. Yeah. We were coming off the GameStop madness. So yeah, VIX, or I should say volatility searches actually topped out in January of last year. So a bit of a weird beast. We'll do it really quickly as well. Really quickly. You did so well on the last time, Mr. Meatball. I'll have you guess again. What are our top 5 search destinations in the U.S. for volatility last year, sir?
I'm going to guess it's very similar to my list for VIX.
There are 2 overlaps. I'll give you that.
All right. New York?
Yes, number 1 this time, which actually makes a little bit of sense.
All right. Connecticut?
No CT.
Oh. Massachusetts?
Yes, number 5. All the folks at Fidelity search and volatility.
All right. Let's go. What else?
I'll give you a hint. Far across the ocean.
Hawaii?
Yes. Hawaii, number 4.
The heck? Let's go Alaska.
Yeah, I might as well throw Alaska in there, but no. Actually, it's Tony Soprano land, New Jersey, number 3.
Jersey.
And then once again, number 2, DC, the District of Columbia, holding firm there. So yeah, that's your Google Trends data for 2021. Read into it what you will. Hopefully, at least it brought a smile to your face. It certainly brought a smile to mine. Let's see if your questions bring a smile to my face. It's time for your volatility voicemail.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, let's go out to looks like you guys in the chat are chatting about VIX trades you have on or perhaps are looking to put on. Looks like MU likes a little bit of the old 20 puts for a dime going out in a few days, wants to take a bit of a flyer to the dark side. Looks like Luigi likes, towards the end of the day, he's thinking about putting on a call spread in VIX with an out-of-the-money strangle against it. So you're going to buy a call spread, I'm assuming out of the money, Luigi, and then a strangle against that? Interesting. Mr. Meatball, what are your thoughts on loading up on some cheap flyer 20 puts for a dime or a call spread vertical in VIX with the strangle beyond that?
Listen, the puts for a dime, pretty cheap, probably worth a little bet in case things calm down over the weekend. We still have, 5 days until the VIX actually expires on the 16th, so 3 full trading days. It could happen. But the other trade makes a lot of sense. That's an Andrew special. So I don't hate that trade either.
Call spreads with an out-of-the-money strangle is an Andrew special?
Call spreads with an out-of-the-money strangle?
Yeah, that's an Andrew special. I'm not familiar with that. Andrew special.
I thought you saw call spread with out-of-the-money puts.
Okay. Yeah, that makes a lot of sense. The out-of-the-money strangle, that's the first time I've encountered that one. I was like, wow,
that is different.
I've somehow missed that in all of the Rock Lobsters trading oeuvre all these years. By the way, Unlimited, I see you when they're talking about making your own jerky. I fully expect some of that to come to the studio one of these days, along with the Lambo. I'll wait on the Lambo, but the jerky, that sounds pretty good. So if you have good jerky, send it our way. Let's go on out to our question of the week right now. He asked you guys, it's been a hot week for a bunch of names that have been pretty beaten up over the last few months. We thought we'd give you your choice of them or to go macro instead. We said if you had to buy a 10% out of the money call expiring on December 31st in one of the following names, which one would you choose? Gave you 4 choices. Peloton, kind of beaten up, even though they had a decent bounce recently. Facebook, kind of beaten up. Robinhood, also kind of beaten up. Or going the old macro route of SPY/SPX. Mr. Meatball, if you have a choice of those, which one is it? And then B, more importantly, what do you think our audience is voting for?
I'd go the Facebook.
You think our audience is going that way too?
I think they're probably going Peloton.
Interesting. And this one kind of surprises me. That's why I like asking you folks, listeners, because you throw me curveballs sometimes. And right now, 40% are choosing the S. That's interesting, given how much we've seen all these. It does rally, but the rallies continue to be short-lived and they get their legs chopped out a little bit. Expecting another 10% to the upside, given everything we're seeing out there with the Fed and everything. That's fairly optimistic, but our audience is there. 30.5% for number 2, Mr. Meatball, for Facebook. So you were there at number 2. And then kind of a bit of a close tie for the end there. About 16% for Peloton, 13.5% for Robinhood. If you haven't voted, that expires kind of right, not that long after the show. So maybe by the time the podcast is available, you might still be able to vote, but probably not. So get in there now, add options. It expires pretty soon. We got to get to the dangerous part. Let's get to the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
This is another one, listeners, where if you don't like where vol is, just wait 5 minutes because we have seen a nice uptick in vol and a nice exacerbation of the sell-off. I think I doomed it. I said at the top of the show, maybe the sell-off is mitigating a little bit, and that was the kiss of death. We're now off over 2% in the NASDAQ, 1.5% in the S&P, and over 1% in the Dow. So again, that's why I'm so surprised that you folks are so bullish on the S. But hey, crazier things, and that trade has worked out for the last couple of years. So who am I to second guess it? Coming into the end of the show, Spikes was at a 25.5, listeners. It's up 3 points now. It's at a 28.5 right now. And VIX Cash at about a 26.5. So a little bit of a lagging juice out there. We've seen that before, obviously, with Spikes and the divvies and everything else coming to play out there. That shows Brian is learning, because he declared victory for himself this morning. He sent me a screen grab of VIX at 24.14, and he sent me a not safe for work email and said, this blank is getting easy. Said, the last 2 times I've been on, I've pegged it. What do I win? Well, I hate to break it to you, Brian, but alas, you do not win. It was looking good this morning, but that's why this game is so freaking hard, and that's why we keep it within 1/10 of a point, even with all this madness going on, and it makes it even more heartbreaking. So alas, Brian, you were winner, chicken dinner until you weren't. You are now almost over 4 handles away in the Spikes and almost 3 handles in the VIX. The Vol is a fickle mistress, Brian. You're winning until you're not. I feel you. I was not that far away. I was 23.65, so that continued eroding a little bit. I would have been a winner, chicken dinner as well. And then my victory was rudely snatched from my grasp. And the meatball, the less said about his 19.99 this week, the better. Let's go on out to the crowd out here, see if anybody had any good business out here. 24 3/4, no joy, 19 handles, 16 handles. Yeah, none of those. Looks like only people with the 20s were Todd at about a 23. Yeah, it looks like, I don't see any. I certainly don't see any 25 or 26 handles. So, unfortunately, it looks like no winner, chicken dinner. I'm like, who was it? I think was it JJ or JVC, one of you who won last week. Congratulations to you. But no winner, chicken dinner this week. So, Mr. Meatball, we both lost. You lost more spectacularly than I, but I will allow you to choose. Would you like to go first or last this week, sir?
I'll go first, Mark, since I was the furthest away.
Brave choice, sir. Have at it.
Well, I know you're not going to cart me. I'm going to say $29.99.
Wow, flipping the script. So can we assume you are hedging your book again? Or is this the real meatball sneaking out?
I really don't have much of a book right now.
Oh, that's interesting in and of itself.
Went mostly to cash.
Oh, the meatball in cash. And going for a $29.99. So perhaps an honest prognostication this week, listeners. Almost at a 30 handle. I don't hate it, given what we're seeing out there right now and the fact that towards the latter portion this week, at least, it seems like every rally is kind of short-lived and gets undercut pretty quick. And when we start having the sell-off, they start to accelerate to the dark side. I was feeling more lofty than last week as well. Maybe not quite as lofty as you, but I would not be surprised to be wrong. I'm going to elevate myself a bit as well. I was thinking more in the 27 double range. Again, listeners, it shows how hard this is because we could both be right in the morning and then be many handles away by the time the crystal ball segment comes to pass. So that's our market this week, listeners. Pretty much a 30 for the meatball. Myself at 27 double. So about a 2.5 point wide market. Are you coming in the middle? Are you coming in outside that? Remember, hit that up. If you're listening after the fact, send it in to us. Questions at theoptionsinsider.com or put it on the social medias. We'll be nice. We count all you folks who send it in after the fact as well. And if you get a bullseye within 1/10 of a point, you win some fabulous prizes. So cost you nothing. And you get some love here on the show as well because you beat the meatball, which is always a good thing. All right, listeners, that music means another hour has come to a close here in the land of volatility views. But don't worry, if you're a secret club friend, you need a little bit more living today, need a little bit more action, maybe a little bit more analysis of volatility. Maybe we can be convinced to do a little bit of that as well. It's coming up in about an hour on Options Oddities. We've already been parsing a lot of great, odd, unusual trades to see what's going on. We can give you catch-ups on some of our ongoing trades. How's that EDU madness? Has the Rock Lobster dumped his obligatory one lot in Ambicel? All sorts of fun stuff. We shall find out a little bit later today. Of course, go to theoptionsinsider.com/secret club to join the party. And Mr. Meatball, if folks want to hit you up, talk about funky 1x5 ratios in VIX or anything else, or maybe the fact that you're hanging out in cash right now, where should they go? What should they do?
Yeah, Mark, here's a fun little guessing game. Right now, the 4,400 puts are $9.50 at $10. I set my vols on Wednesday Do you know what my theoretical value is for the 4,400 puts? Take a guess.
I'm going to say you set them on Wednesday. So yeah. I'm going to say 375.
27 cents.
Whoa. I knew it was less. I didn't think it was going to be that much less. You know, that's the old days. You come back to the office and your risk manager taps you on your things and maybe you have to adjust your SKUs. And you're like, no, it's going to be here. Just leave it. Don't touch it. That's what that is, sir.
Your deltas seem a little off.
You're $5 away in every market that you're making. No, it's going to come to me. Trust me. Don't move a single thing. I've had a few of those conversations over the years. So if folks want to reach out to you, maybe they want to check out your Edge Hunter sheet so they can do that for themselves and not adjust their sheets themselves. Where should they go? What should they do?
Yes, go to optionpit.com. We write a VIX blog every day. Today, I wrote up explaining that October call ratio, but we've got all kinds of interesting stuff on a daily basis. Make sure you come and check it out. OptionPit.com.
OptionPit.com. Check it out. Check out their sheets. You can print them out and hold them in your hands and pretend like you used to be on the old trading floor days. Fun, anachronistic stuff over there. We also got a 28-31 prediction in our chat, which is also a Super Bowl prediction, it seems like. So we got a twofer prediction. You don't say which team's going to win. I guess that's just your Super Bowl square. We should do something for the Super Bowl. I don't know what it would be. We got to get it going. The day's almost over. But intriguing stuff. Check them out in the land of the pit. You know where to go to learn more about all things spikes. MyAxOptions.com is the place to go. You get all this action, all this data. You can see exactly what's printing. You get the latest releases. You get a snazzy video over there about all things spikes. You actually get some links now to our buddy Mr. Nick and his Quick Strike offerings because he is working with the MyAx folks there now. So if you didn't get enough of Quick Strike over there on TWIFO, you want to get some action. They are starting to delve more into the equities now. You want to take that quick skew and apply it over there? Well, you can do that. MyAxOptions.com/spikes. You even get a link to a cool show called Volatility Views. What more could you possibly ask for from a vol-oriented destination? They also have the shift search there as well, so you can check out that stuff. So you can spend days just on this page, just searching and shifting and listening to shows until your heart's content. But you don't have days. You got less than an hour because they're coming back for Options Oddities. I got to go get ready for that. And then, of course, back again on Monday, the option block, hot and heavy, fast and furious, all the way through to another Friday, another episode of Volatility Views. Have a great weekend, everybody.
Volatility Views is brought to you by MyAx, one of the fastest, most efficient trading platforms in the world. MyAx is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, Spike, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at MyAxOptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.